Hey, welcome back to Driven Channel. And I'm here with a mortgage guy, another mortgage guy here. So that's special. Like I don't have a lot of mortgage people on the podcast. So
Yeah,
and the cool thing is that you're also Mexican American.
that's right.
Art Cruz, you're from you have Modern Mortgage in Georgia.
Yep, Modern Home Mortgage in Georgia.
Yeah,
Arturo Cruz.
Arturo.
Like, growing up in Georgia.
But you go by Art?
Yeah, they call me
Yeah.
Art. Art.
Yeah. Art sounds cooler. Yeah, Arturo. It's like my name's Alberto.
Yeah.
Albert sounds kind of cool. I should probably start doing that, Maria. They say my name is Alberto. Alberto.
Yeah.
Yeah. No, but tell me, man, like you're how old?
33.
33. And you started your company 2016?
No, end of 2022, like August
Oh, shit.
2022. So it's a growing company.
So in 2016, you left the banking world. Yeah.
Yes, I was in investment banking.
So before we get into that, 2022, you started it, and you're gonna hit good numbers this year. Like you'll get close to $1 million in income. You think?
I hope so.
Yeah. Yeah.
Yeah.
33 years old. I made my first $1 million in 2016. So 2016, I was how old, Maria? I think I was I think I was your age. I think I was 33.
Yeah.
So maybe this is your year too, because
Yeah.
I was born 1983. Take away 2016. I was 33.
Mm-hmm.
So when I was your age, that's the first year I made $1 million
Wow.
Yeah.
That's incredible.
with the mortgage guys.
That's awesome.
Yeah.
Yeah. Well, our goal is to continue to do that.
Dude, I'll help you get the $1 million and then just skip. You'll skip like 10 years with my help.
Well, that's what I'm here for.
Yeah. No, it's gonna, because you'll save all the mistakes that I made. I made a lot of mistakes, like $1 million mistakes. I lost all my real estate because of that.
Well-
Yeah, but I'll tell you all the details. But so you left the banking. You were in the banking world, right? So let's talk about your story. So you're from Georgia. You were born there.
Mm.
Mexican parents. You're Mexican. Your parents were born in Mexico.
My mom was actually born in Florida.
In Florida.
Yeah, but I was telling them, I was born in Texas.
You were born in Texas.
Moved to Florida for a little bit,
Mm.
but I moved to Georgia when I was like in second grade,
Got
grade, I think. So
And-
Georgia's home.
Yeah, and your dad. So your dad was born in Mexico.
That's right.
So your mom was born in Florida, but she's Mexican too.
That's right. She's like a second generation
How did she end up in Florida?
family.
Yeah.
Yeah. Like my grandparents moved from Texas to Florida, and then I guess back.
So how was your childhood growing up? Were you like balling, making money, or middle class, or what were you?
Yeah, not at all. I will say it's I had everything I needed.
Yeah.
I had a mom that took care of me and my brothers, and a hardworking dad. I mean, I want to say, like, when people ask me, where does your work ethic come? It's, like seeing my dad work so hard, and taking me on job sites with him,
Yeah.
and and just always having those conversations, échale ganas, mijo.
Yeah. No,
Yeah.
that's the same thing.
Quiero que sepas más que yo,
Is your business mostly Latinos?
I want to say about 45%
45%.
of our business
Yeah.
is Spanish. Yeah.
So Patrick Bet-David,
Yes.
he built his company on Latinos.
Wow.
Yeah. So he focused on Latinos, especially Latinas,
Mhm.
and he focused in that in the Latinos, and that's how that helped him blow up his company.
Yeah. I want to say right now, what I'm seeing a lot is companies are making an active effort to capture that demographic,
Yeah. Well,
whether it's real estate.
by 2040, if you Google it,
Mm.
they're saying that 70% of the new homeowners are going to be Latinos. So we might go back to being Mexico. I don't know, but yeah, that's good. So growing up, like, what is your story? Like, what's your first job? Were you a straight A student? Did you go to college? Like, how was college, high school, all that stuff? And then what was your first job?
Yeah. So, I didn't like school. I was
either.
like a stellar student.
I hate school.
I went, so, my mom wouldn't get in trouble, but,
Yeah.
I didn't have straight A's in anything,
Yeah.
I almost didn't graduate high school, to be honest with you.
Yeah.
Luckily though, I met a gentleman at church, and he worked at the bank. Now, mind you, this was after working in restaurants, working in assisted living facilities, you know, being servers to the older people, you know, the seniors. And he said, "Hey, look, we've got an opening for a teller position at a bank, you know, Wells Fargo Bank." So I said, "Okay, well, I'd love to interview for it." And that was just kind of like my first step in. So, teller, banker, business banker, investment banker. I got my Series 6, 6.3, 6.5 variable. I got all that when I was 21 years old.
Oh, wow.
21 years old or 22 years old, right around there. And then as soon as I passed all my courses, one of my buddies was like, "Hey, I started working for a mortgage company and it's going really, really well. We need somebody who speaks Spanish." He's like, "Would you like to come?" I was like, "Well, tell me a little bit about it." You know, he kind of mentioned to me what he was bringing home, and I was like, "Sign me up," you know? And so I got into mortgages, and it's been a wild roller coaster ever since.
Yeah.
You know? You learn a lot in the business, for sure.
So when was the first time you got into mortgages?
2016.
2016. And you were working for other brokerage?
I got on with the direct lender first.
The direct lender?
Yeah.
So talk about that. How was the direct lending versus the broker world?
The direct lending world is fantastic. I love how it operates.
Yeah.
You know, it's a lot. You can make a lot of phone calls from within. However, I've seen that they're a lot more conservative. They put overlays on guidelines. So, like, for example, they may not work with certain work permits.
Yeah.
Right. Or they may add additional rules to what Fannie and Freddie say.
Yeah, yeah.
You know?
I heard that you make more money as a broker than direct lender.
Yeah.
Yeah.
Absolutely.
Well, why do you say so? Because I mean, for the people that I know, but for the people that are watching this, like how do you make more money as a loan officer? Because maybe there's loan officers watching this in Florida or in Georgia that want to join your team, company. Like, why is it better to work for a mortgage broker versus a direct lender, money wise?
Money wise, because
you've been in both worlds.
That's right.
You know.
That's right. I want to say, just with the direct lender, they had a bunch of rules that, you know, they put on top of the rules. So, like, it wouldn't matter if you went and spent all day reading the Fannie Mae guides, right? They'd be like, "Well, we can't do this," right? So now, because they can't do it, the client goes down the street to a broker that has no overlays, and they get the business.
Yeah, right. You probably get a lot of turndowns, right, from direct lenders, and make it work.
Yeah, absolutely. So, you know, like, for example, a lot of direct lenders don't, especially like when a lot of your clientele is Spanish, they don't know how to work with work permits. Yeah. They're like, "Oh, we can't use that one. It's expired. Oh, we can't," you know? And so we get that business, and we're reading the Fannie Mae guides. We're like, "Hey, you guys, this is perfectly fine."
Yeah.
The guy's been here for 2 years. He's got renewals for 2 years, right? And so it's understanding that because the direct lender is, you know, basically lending their own money, right? Whether it's however it is they do it, it's coming at a premium, right? They're running everything in-house. Yeah. You know, so it's going to come at a higher cost to the consumer.
Now, as a broker over there, can you pay your loan officers 1099 or no?
In Georgia, no.
In Georgia?
Yeah, in Georgia, no.
In Florida, yes?
In Georgia, not too sure.
Yeah.
I'm not too sure. I think in Florida you can.
Yeah.
I've heard of loan officers getting paid 1099 in Florida. I just got my license in Florida, though.
Oh, okay.
You know, so I haven't, like, expanded to Florida per se. Yeah. But it's definitely next on my list.
Yeah. And then also direct lenders have a higher, they make less, like they make less basis points than a broker would.
Well, the originator does.
Yeah.
Right. I've seen that. And in instances where I've seen the LO at, you know, the direct lender shop make more, it's because their rate sheet is out of whack.
Yeah. They raise it up.
Raise it up. They're like, "Hey, we'll pay you 200 bips if you can sell this loan that's already 200 bips over it."
Yeah, but then they're making another
on the back.
200 bips.
Yeah, exactly.
Yeah.
Yeah. So, but yeah, working with a broker company, you know, like Modern Home Mortgage, you've got the capability and the flexibility to choose your investors. You create good partnerships with them, you know, and every once in a while they'll throw you some exceptions for being being a good loyal client.
So 2016, you started in the mortgage
That's right.
business. Why did you decide I'm going to start my own company?
So I was there for about 2 years, and it just wasn't working.
Why not?
I don't. Maybe my clientele wasn't as paper as it needed to be at the time. You're new LO, you're getting new business in. Believe it or not, I was actually looking at jobs.
Yeah.
To go back to the bank. And anyhow, I ended up joining a broker shop. It was like a 3-person broker shop.
You should have just reached out to me. Yeah.
It was a 3-person broker shop. I went from this like really big company that had this really big building and it was super, super nice to
Which company was that?
it was a company, I'd rather not say.
Okay, I
Yes,
see.
yeah, it's that.
One of those.
Really big building down, in part of town where I live.
Yeah.
And I went to this, shop that was, tiny. It had like 2 offices. They were both, husband and wife owner and
Small mom and pop.
small mom and pop. And that's where I kind of learned everything.
Mm-hmm.
That's where I learned the broker side of the industry, being like really hands-on. It allowed me to really understand what was going on.
And then what made you decide I'm going to start my own?
You know what? It was just that time. There's a decision you have to make.
Yeah.
When you feel you're ready for new challenges and new experiences, and maybe you want to see a different lifestyle for yourself and your family. So I think that was.
What are pros and cons? Like, what's one pro and one con of being a business owner now and having people under you versus when you were a loan officer?
Wow. Where do we start?
I'm sure you have more headaches now, right?
Oh, absolutely. I thought I was going to come in and just, make money hand over fist, and I could just focus on sales, which is what I'm good at, right? And which we are, you know. And then I was like, oh, compliance. Oh, call reports.
Oh, yeah.
Have
you got any lawsuits yet?
No.
Yeah.
No.
Well, you're going to get some. 100%. No, you're going to get some 100%. 100%. Like, I guarantee it. Like, I would, you're going to get lawsuits. So the bigger you grow, like, you just get lawsuits. I was with a big mortgage lender. I think it was a couple of days ago. And they were telling me that their attorney bills are $300,000 a month. Yeah.
They must be moving some volume.
They funded 1,200 loans last month.
Wow.
Yeah.
That's huge.
They're the biggest mortgage broker in the nation.
Wow.
And $300K a month in attorney fees.
Wow.
So in reality, they don't make. So what I get from that, because I ask a lot of questions, I want to get the knowledge. Sometimes bigger doesn't mean better. Sometimes bigger doesn't mean you make more money.
That's right.
Because you gotta get the income and then pay all the expenses. So then how much is left?
Correct. And then that also depends on the volume.
Yeah, you know where you could see where somebody is doing really good and when they're really successful.
Tell me.
When they've had the lifestyle for like 5 years, 7 years, 10 years. Once you get the 10-year mark, you're like, you know what? This person can figure anything out. He's been through everything. Like, she's been through everything. They can figure everything out. And that's what happens. In after 10 years of being active in business, there's only 12% chance you go out of business.
Wow, that's interesting.
Yeah. So 88% chance you're going to continue. And then you also have experience. So you know what you could pay, what you can pay. You know how to raise capital. You make a few phone calls. You get investors. Like, there's so many things you learn. Yeah. And that's why it's, there's only a 12% chance you go out of business after the 10-year mark.
That's right.
So it's man, I've learned so much, but it's been so cool. But that's why I asked you, any lawsuits yet? Have you battled? Have you been close to getting the heart attack yet, or not yet?
Yeah, actually, believe it or not.
So that check you got it. Yeah, that check you got it.
And it's interesting because I thought, you know, it's just going to be super easy, but
Yeah.
you don't realize all all the spinning plates
Yeah.
that you have around,
Yeah.
right? And
Yeah.
you got like, you leave this one
Yeah.
plate falling, you rush over here,
Yeah.
and then still process the loans in a timely manner.
Mm-hmm.
The biggest challenge that I've had is finding the right people and continuing to hunker down on building an operational just machine.
Mm-hmm. Yeah, well, so I mean, tomorrow we're gonna go over so many operations, systems, processes. There's a pain threshold, so that's why, like, when you've been in business for 10 years, you know everything, and then before that, 10 years in business as self-employed. So I was self-employed for the first 9 years, and then a business owner for almost 13 years. So I've been through 2008, everything. So there's a pain threshold.
Yeah.
So there's 6 levels. When in order to make it really big, you got to be a level 6. If you're a level 5, you'll get maybe, you'll do good, you'll do really good, but not, you won't get to that next level. If you're level 4, 3, you're just going to be average, But if you're level 3 and under, you're not going to do shit.
Yeah.
You might as well just be an employee or work for somebody else.
Absolutely.
Because there's no point of having a mom and pop shop.
That's right. And I'm seeing that more and more nowadays is, people leaving where they are and they're starting their broker shops and they're just one-man shops, right? They're just working out of their basement or, and they've owned the company for years and years. And I'm like, what's the point of opening your own mortgage company if you don't want to scale, if you don't want to grow, if you just want to do what you do, and you can just honestly get rid of the headache of everything that's compliance and operations, and a company will pay you just as much as you're earning right now to go manage a branch.
Yeah.
Just leave all the other stuff out of it.
Yeah.
Because that's been, one of the key things to scaling mortgage company is like, great, you're great at sales, but how great is your operations? How great is your compliance? Right? And piecing that all together to make sure that, that your business is going to be successful has been, is a challenge. But like I said, if you're, and nothing to one-man shops, I'm just saying, like, if you're going to open a mortgage company, I mean, your intention should be to scale it. And
you know what's good for you too, for me as well, is that mortgage companies are bigger than real estate companies. So let me explain what I mean by that. Do you know what's the highest valued real estate company?
I'm Albert Preciado. If you like what you're watching and you want to learn from an entrepreneur that built 8 companies and makes over $30 million a year, text me at 213-277-6208 and let's make it happen.
Take the time.
value.
Yeah. Well, what real estate company is the biggest?
Biggest?
Yeah, the biggest.
Isn't it like Keller Williams or something like that?
No.
Berkshire?
No.
What?
They're few hundred million.
Okay.
Yeah.
Who is it?
So, like, I'm talking brick and mortar.
Yeah.
Have you heard of Real and EXP?
Yes,
Yeah.
I have.
So EXP is like drowning right now. Like their value is like going down the drain.
Plummeting.
Yeah. And the real estate market, the economy's not that great. So we've been in a recession for a year or more. People don't talk about that. They're hiding it. Real estate sales are like down. They're worse than, like, it's never been this bad going back to 1995.
Wow.
It's worse now in real estate than 2008.
Wow.
So if you look at EXP, you look at the market cap, it's just going. It's like I said, sinking. So what they're realizing is that, like, they have like downlines, and when they recruit people, they have caps. So they don't. What the agents don't realize is that when the market was great, 2021, COVID, everybody's making money. Like you could get a cheetah and they'll sell real estate.
Yeah,
it was that easy.
Yeah.
So now what they're realizing is, if there's no closings, there's no downline, and you're never going to reach the cap.
That's right.
So now a lot of realtors are running away from EXP.
Wow.
And so so they went from like 2 point something billion valuation to like right now they're 1.7 or 8. Like so they dropped quite a bit, but it's going like this now.
It's interesting.
That's not the biggest real estate company though.
Okay.
The biggest real estate company is a technology company.
Okay.
They're called Zillow. You know Zillow? Yeah.
Oh yeah.
Zillow is the biggest real estate company. What did they do? They replaced realtors.
That's right.
They don't have realtors. It's all online. They got rid of the realtors and everything's online. You just go there, buy a house, make an offer, and it's technology, AI that's doing all all the analysis and all that stuff. So that company, I believe they're worth close to 10 billion.
Yeah, sure.
Or more.
Well, see, when you say it like that, then I can certainly see Zillow, but like when you you know, like for me, like a mortgage guy, when you're just like saying real estate, I'm thinking like Berkshire, Sotheby's.
Yeah, and those are like small, like
correct.
tiny companies compared to those other ones.
Yes.
They're worth about a few hundred millions.
Correct.
Now, I was going to mortgage. Mortgage is not like real estate. So like you're in the great industry, because when you think about the highest the biggest mortgage companies, you know the top two, right?
The biggest mortgage company.
The biggest mortgage company. There's two Goliaths. So Rocket Mortgage. Rocket Mortgage is worth about $35 billion. UWM is worth about $20 billion. And then from there on, you have a lot of multi-billion dollar mortgage companies. There's a lot. Why? Because mortgage is a really good industry to be part of. So me and you made a good decision with mortgages.
Well, absolutely. I mean, those companies come up at the very, very top.
Yeah.
You know, it's like, it's crazy when, you know, Rocket's more like a technology company.
Oh yeah.
They're not really, you know, so when you say mortgage company, I'm like, yeah, I just got back from Detroit, you know, last month, and to me, you know, Rocket's a...
You were at Rocket?
Yeah.
Yeah. So you chose Rocket over UWM.
I did.
What? Can you talk about that?
Yeah, I can talk about it a little bit. I just felt like this.
And
you know,
how do you feel about them making us like choose like?
Yeah, I think it's messed up. I think the consumer should have choice. I think the broker should have choice, right? Honestly, it just got to the point where, you know, you lose your account executive, they switch you up with somebody else. You know, I used UWM for quite a few years.
Yeah.
And I just didn't like the way it was going. But, you know, I guess those are some growing pains with companies that big a caliber. You know, it's just trying to find the right asses to put in the seats, you know. And so I didn't like how it was going at UWM. I didn't like the support our team was receiving. Yeah. And so they messed up on a condo loan. Didn't order condo paperwork till like the day before closing.
Yeah.
And I was like, we can't have, you know,
because they're obviously both amazing mortgage companies, but you give the edge to Rocket. And you're right.
Right now, I've really liked working with Rocket.
Yeah.
You know, I started working with them in January of this year, and so far it's been really great. Yeah. And you know, I have really good relationships in the broker community. So you know, it's like every once in a while, one of my friends will call me and be like, "Hey man, where's Rocket prices?"
Yeah.
And I'm like, "Why? Because you signed it with UWM."
Yeah.
So, but yeah, it's great.
And then the good part about mortgage. Because I was talking to him, like I have a few billionaire friends. And so I asked him about like, hey, what do you think real estate mortgage, what's going to happen? Is mortgage also going to get AI involved, and they're going to replace loan officers and they're going to do AI? So they told me that the answer is no, that mortgage is safe because mortgage is very highly regulated and there's a lot of emotion involved.
Absolutely.
Meaning when you open an escrow, there's so many checklists that you have to go through, waiting periods, and what happens when you open escrow and you're in the middle of it. Like people change their mind, then they're rate shopping, then they get very emotional about the house. Now they change their mind.
That's right.
So a loan officer has to communicate with the consumer, with the borrower, and it's like a relationship you form. So it's more emotional, more connection that you have to do to like keep the client, on board. And then also you follow up, and like when it's time to refinance, you keep that client, you refinance again every 6 months, 1 year. They want to lower the rate, they want to get some cash out. So they like to have that human relationship. So, I mean, and not to mention there's so many mortgage companies that are worth so much money. Lending is huge. People are always going to need loans. People are not going to buy homes cash. Some of them do, but you're always going to need a mortgage.
Absolutely.
So you made a pretty good choice right there. Now, what is your plans for your mortgage company, Modern Mortgage? Like what do you want to do? Do you want to grow it? Do you want to double, triple, quadruple? Do you want to sell it one day? What is your plan? Are you going to become a lender?
So it's Modern Home Mortgage.
Yeah.
There's a Modern Mortgage out there, I think.
So Modern Home Mortgage.
That's right.
Yeah.
That's right. I'd like to build the business up to where I can make, 100 million in revenue. That's my first goal.
Yeah.
First goal.
So do you know, have you ever worked backwards? Do you know how many loan officers you need? How many years is it going to take? Do you know all that?
Yeah. So, interestingly enough, I recently started doing those calculations, but it really falls down on, in averages. And, what I've noticed is like, I have X amount of players, and this amount of the players are actually doing, a big portion of the work.
Yeah.
So it could be just finding the right players. But yes, I'd like to continue to grow Modern Home Mortgage. I've been in talks with some banks, and they want to do like a mini core, right? I'd like to get my operations better in place before I even take that step.
Yeah. So like how many loan officers do you want in your mortgage company, and how many units do you see yourself like closing in a month? Like your ideal situation, and like let's say in 5 years from now. 5 years from now, Modern Home Mortgage, like what is the production? How many loan officers? How does that look like in 5 years?
Man, that's a great question. You're making me think really, really big right now.
We gotta cast the vision.
Yeah, I mean, I'd like to be closing, upwards of.
How does your headquarters look like?
Yeah, my headquarters is nice. You got a 3,000 square foot place. You got, I just got the space last year, believe it or not, because, I opened at the end of 2022, right? So it was just me and my processor, right? So I was working from my house the majority of the time. So I got a 3,000 square foot space, and thinking that I wasn't going to outgrow it anytime soon. And here we are. We've got some people sitting on each other. Yeah. Right. We're pretty crammed in there right now, but it's great because now we're looking for another spot.
Yeah.
Right. But to answer your question, I mean, I want to be closing 300, 500 loans a month.
Yeah.
And so that's the future I want to see with Modern Home Mortgage. I don't care to be the biggest mortgage lender in the nation. Yeah. I care to just set out to accomplish the goals and help those around me, bring others up, change people's lives.
Yeah.
Yeah, no,
100%. You want to change lives. And one thing you got to do is you got to just keep growing.
That's right.
Because when you stop growing, you start dying. So like every year, if you're doubling, that should be your target. Like I'm going to double this year. I'm going to double this year. Because most people, they grow linear. You heard about linear and exponential growth?
Yeah, it's like
linear is like, let's say I have like Maria, just use her as an example. She's making $60K, right? Then she makes $65K, then $70K, then $75K, or 80, then $80K.
Correct.
And in 5 years, she only increased like $25K in 5 years, $5K each year. Now,
correct.
She's actually making less money because the dollar is worth less.
That's right.
So like she's making less and less, even though she's making $5,000 more every year, she's making less money every year because her dollar is worth less. So that's why it's very important for you to go, if you're making $60K, then Maria should make 120K the next year.
Absolutely.
Then 240K the next year.
Yes.
Then 480K, then $1 million, then 2 million, then 4, 8, 16, 32 million, and you get the point.
Yeah, for sure.
So now there are recessions and the economy, then it gets bad, especially in real estate and mortgage, we get affected. But it's like 2 years more so of nightmares. So you just got to be sure that when you're that you save up, you have some assets, because when those 2 years happen, then you got to make sure that you take advantage, because there's a lot of opportunity. Most people see, well, man, 2008 was bad. Well, there was a lot of opportunity.
There was a lot.
Right now, dude, if you're doing very well right now, and now it's about to get better, but a lot of people are very, very hurt. They're not going to recover. Like, there's going to be so much opportunity, and then you're going to blow up. So from here on, like, you're going to double. And I think once you get to a point where you get to those 300-400 loans a month, you're going to be like, man, I want to get to 800 loans a month.
Yeah.
And you're just going to keep growing that. Now, Modern Home Mortgage, why did you pick that name, and what does that mean to you?
That's a great question. The reason I picked Modern Home Mortgage is because, there's a lot of things that are changing in today's age, and a lot of the Fannie and Freddie guides and HUD guides are just super outdated, and so it's not uncommon for someone or a client, to not fit the box of like a traditional lender, right? And so the reason I named the company Modern Home Mortgage is because one of my goals for my company was to have a company where there wasn't a product I didn't have, where I could help anybody in today's age buy a home. That's it.
Yeah.
So whether it's, hey, they didn't file enough income, great, let's get a P&L loan. Or hey, let's get a bank statement loan. Hey, you know what? We've got a no-doc primary loan, right? Because people bring money over, sometimes from other countries, or maybe they inherit money, right? And because they don't fit the traditional box, right, the banks won't finance them.
Yeah.
So like, for example, our no-doc loan, most no-doc loans are DSCR loans or investment loans, or you can't live there, right? So having a loan program where we can call it a primary, we know you're not going to live there, and there's no income or employment required. I mean, that's huge. It's going to help many people into homes, right? So yeah, that's why we named it Modern Home Mortgage. It's our goal to make sure that there is not a program out there that we can't offer.
Yeah.
To help people in today's modern age purchase homes, because man, those are some old rules in the handbooks.
Yeah.
And to touch back on one of the reasons why you were mentioning AI, to touch back on that, it's the guidelines. I mean, I interpret them one way, and then the underwriter on the other side is interpreting a completely different way. AI wouldn't be able to distinguish that, which is why I don't feel like, sure, for like clerical stuff, absolutely AI could definitely, lower some phone calls and emails. But when it's the decision making, at the end of the day, when the loan is ready to be sold to another investor, maybe AI wouldn't be making the right decisions, the best underwriting decisions, right?
Even my Tesla, I get pissed off at it sometimes. Like, it's fucking, it makes wrong decisions.
Yeah.
Like, it'll just break all of a sudden, like in the middle of nowhere.
Yeah.
Like, I'm driving my usual route, and all of a sudden, like, bam, I think it sees a ghost and slams on the brakes. And
You think it sees a ghost?
well, I don't know what they see, but it did.
You know what? I heard that was the thing with like Tesla.
Yeah.
Like
They see ghosts.
Like they see ghosts. Not to get off topic.
Maybe I was about to run over a ghost or something. But yeah, it's like technology. You gotta. I think technology, you just add it, and it makes you even greater.
Absolutely.
But it's not something that you replace. You're not gonna replace a human with
That's right.
technology.
Yeah.
Yeah.
Because there's and I always mention this to my team. There's a transactional aspect and the emotional aspect of mortgage processing, of mortgage originating.
Yeah.
And when you can get down to the why, I mean, who knows? I don't know if AI is that sophisticated to the point where it could, try to uncover those kind of emotional needs from the client.
Yeah, yeah, 100%. So how many loan officers do you have right now?
12.
12. And I think for the
12 or 13. The reason I say 12 or 13 is because I have some people joining right now.
Yeah, yeah.
So like, like consider them on the team. But
so if there's a loan officer watching this and you're like thinking like, man, you know what? I want to join Art. I think the best time to join a mortgage broker is on the way up. Absolutely. On the way up, because like if you're a loan officer and you go work for Loan Depot or what's that? American Financial Network, the New American Funding. They're kind of like the smaller lenders. But if you go work for some of those smaller lenders, you're just going to be one of the many.
That's right.
They're big. They're actually big, but they're not. Rocket Mortgage and UWM are different. But if you want to work for a big lender, you're just going to be another loan officer out of all the tens of thousands or thousands of loan officers now. And you're not going to get equity. You're not going to get, you're going to be just at the bottom forever. Now, I don't know if you considered this yet, but like if you join a broker that's new, that's up and coming, then you might get equity. Like let's say you get a super talented person that they could go and start another small mom and pop. But if you see value in them, like what I do is like I give equity to my loan officers, the ones that they have to earn it though. But then instead of starting your own, you're just an owner here. You get ownership, and it's your own. So we help it grow it because there's a lot of stories like Bill Gates, Steve Ballmer. They started Steve Gates. I mean not Bill Gates. He was the founder, and then Steve Ballmer was just like an employee there, and then he got equity. Now they're both worth about the same, about $120 billion each. So you don't have to be 100% owner of zero, because like 0 times anything is still 0. So like now Bill Gates, you know how much he owns, how much ownership he has of Microsoft now?
No.
Like 1%.
Wow.
Yeah.
Still raking in millions.
And he's still 120 billion worth. So if any loan officer is watching this and man, you want to work for somebody very closely, the owner here, the founder, and you want to be mentored, it's a great opportunity because you're going to grow. He's going to pay attention to you versus like a big company that's already 20 years in business. So if anybody's watching this or loan officer, or maybe it's a real estate agent that wants to work with you.
Absolutely.
Or maybe it's just a borrower that they're like, hey, you know what? I want help with my loan. You're in Georgia and in Florida, right?
Georgia and Florida.
Where can people find you? Where do they follow you? How do they reach out to you?
Yeah, so you can follow me at _Art Cruz right there. Instagram all the time, TikTok, same thing.
Yeah.
Usually I'm putting out videos trying to educate people and show off my family and my 2 little girls and
well, that's awesome.
Things like that,
I beat you by 1. I have 3.
Yeah.
3 girls. Yeah.
Okay.
Yeah.
Wow.
You know what they say about guys, fathers that have all girls, right?
Tell me.
They're the best.
Yeah.
Yeah, they're the best.
Girl dads are the best.
Yeah.
I believe it.
Yeah.
My wife and I, we keep talking to her. Are we going to have one more? I'm like, man, my lucky to be a girl. Yeah. And right now, I don't have any say at my house, man.
Yeah.
I just go with the flow.
Just keep pumping those kids out.
Yeah, I know. Yeah, just keep pumping the kids out, and it's.
You just got to keep increasing the earnings.
That's right.
Yeah.
That's right. And that's the thing is like, my children inspire me. My little girls inspire me. People say, well, like, I don't want to have kids because it's expensive. Yeah. I was like, how does that even make sense?
Yeah.
Like, man, I wake up, I see those little girls and,
How old are they?
5 and 1.
Awesome. Yeah. So I have like a almost 5 and a 1 too.
Yeah. Yeah. So, it's interesting, man. Yeah. It's fun. It's a fun time. I love being a dad.
Yeah. They make battling heart attacks, growing businesses easier.
Oh, absolutely.
Cause now you can't quit.
Yeah, you can't, man. When I got into mortgages, I thought I was gonna work a little bit and just hire stuff, but no, man.
You pick one of the most complicated industries.
Yeah.
But it's worth it in the end. So
absolutely,
entrepreneurship is worth it in the end. But it's not for everybody. Like not everybody's an entrepreneur. Some people are better fit. Most people are better fit to be intrapreneurs, to
Absolutely.
work alongside an entrepreneur.
Absolutely.
Because you take all the risks, you put the money out, you deal with all the fires, but somebody can come in here, work with you, make a lot of money. You could mentor them, help them out. So, man, you did a great job with your company.
Yeah,
Looking forward to see where it's at in 5 years.
Yeah. Absolutely.
And congratulations to all your success.
Thank you, Albert. I appreciate you for having me, and I'm super excited about your Driven event.
Yeah.
And I can't wait to see what the future holds for our companies,
Yeah.
your company, my company, and all the success and all the people that we're going to bring up with us.
Yeah. 100%. We'll work something together, man. We'll do some business. Yeah.
Let's go.
Awesome. Right, Art? Thank you.
Thank you.
I'm Albert Preciado. If you like what you're watching and you want to learn from an entrepreneur that built 8 companies and makes over $30 million a year, text me at 213-277-6208 and let's make it happen.